Hey guys, welcome back to the channel. For those that don't know me, my name is Will. I've been trading since I was 15 years old, so coming up on 6 years now, which is absolutely insane. If you haven't already, hit that subscribe button. Stay tuned for all of the crazy content that I have planned in the near future. And in today's video, we are going to be diving into a trade that I took on Monday, hang on, give me 1 second. The 25th of August on GBPUSD. It was an awesome setup. Didn't necessarily go as planned, which is a little bit unfortunate, but we're gonna dive into that anyway. My entry confirmations, my confluences, my reasoning behind the trade, my fundamental analysis, my technical analysis, all of the above, right? So stay tuned and make sure to stick around to the end of the video because you don't want to miss anything that's included in my analysis. But before we jump onto the charts, I did want to quickly say thank you so much to all of the people that have subscribed to my channel. I believe I've got 26 subscribers now as I'm recording this video. So I really appreciate the early support. I've got so much planned for this channel. I'm going to provide so much content for you guys and hopefully as much value for you guys as possible, including live pre-market analyses, trading sessions, and obviously trading sessions as well. So if you do want to watch me trade live, stay tuned for that. But without me fluffing on for too long, let's get into the rest of the video. Jumping onto the charts now, guys, I'm going to run through my full top-down analysis, including the fundamental analysis that I'm going to pop up on the screen now for you guys to look at. Pause the video, do whatever you want to do. But essentially, once you've built out a thorough fundamental analysis once for each currency pair, all you need to do from there is monitor news, upcoming catalysts and data releases, and just update your fundamental bias as time progresses. You need to build the picture, the overall perspective, and gain that understanding of what is actually happening. Why did, for example, the RBA choose to delay cutting rates at this time? Or why did they cut rates? What are they trying to do? What's their objectives? Is that happening? Is that not happening? What's stopping them from doing that? All those sort of things. You need to just piece the puzzle together to get that perspective, and then coming into the charts becomes so much clearer in your head. So many people, when they trade just technical analysis, they don't know whether to buy or to sell. Whereas when you do a fundamental analysis, because macro drives markets, technicals define risk. All you need to do is look for that setup on the charts. Sometimes, just say you've got a bullish fundamental bias, but price action's bearish. Sometimes it hasn't actually shown that movement on the charts just yet. Or maybe it has and you need to wait for a retracement. But you're just identifying the next available opportunity to take that position in line with the fundamental analysis. And also at the same time, sometimes you can be wrong and it just involves more research. You just need to figure out, okay, why is price still going down? I did my analysis and I have all these reasons as to why price should be going up. Why is it going down? Probably missed something in the news. Could be a million reasons, but just build out that analysis. And it can be really simple, but it can also be super complicated. So it really depends on how much work you want to put in and how much understanding you want to have. Or you can literally just trade technical analysis. You don't have to trade fundamentals. I just like to include a fundamental analysis into my strategy because it gives me so much more clarity. So obviously the bias is the United States dollar stronger than the Great British Pound, and we're looking at shorts on GBPUSD. And you may be thinking, Will, if I go back to maybe the daily time frame, maybe saying, Will, why the fuck are you looking for sells when price action just had this huge rally to the upside, right? And this is yesterday, the 25th, this trade. Last week on Friday, Jerome Powell, there was an event on and he was speaking, and the dollar had a huge, it pretty much just plummeted to the downside. That is a geopolitical event. So in terms of all of the fundamental indicators that I've used in my fundamental analysis, doesn't necessarily include the geopolitical risks. So that was sort of like a one-off catalyst. The thing is, I still have the short bias, and the best part about it is just because price action had this huge rally to the upside in GBPUSD, it gives us a good opportunity to catch that move to the downside. You can see the trade here. Euro USD actually ended up being a lot cleaner, and I had this trade marked out. I was actually on a call with a member in our community live as he took this trade, and I'll put his results up on the screen now. He was able to catch that trade. I didn't enter because I actually caught a trade. I caught a buy on USD CHF. As you can see here, I targeted there, and obviously I had this GBP USD trade on, but it didn't really work out, which is a bit annoying, but that's perfectly fine. So we're going to jump into it now before I keep rambling on forever. So the weekly time frame, starting from the highest time frame, always working our way down. Weekly is bullish from this low to this high. The daily time frame still bearish. We haven't quite broken structure to the upside. We're still within this range. Price, we've had this internal break here on the daily. It's more of a 4-hour structural point, indicating that we could be targeting this low down here. On the 4-hour time frame, bearish, obviously, following that break from this high to this low. Now, there's not really, this is sort of the second significant key level that I could identify, but I may as well have my, the top of my range from here, just because this internal structure here, it's not really significant for me, or significant enough for me to be able to place my range at this high. Like, you just wouldn't do it because it's not a significant level. As you can see, price just absolutely plummeted through that level. Now, the hourly range. The reason why I didn't have the hourly range marked, because it's clearly bullish and I know what the range is, and I'm not really taking that into consideration just as of yet. Obviously now the 1 hour range would be from this high to this low, but I am using FX replay. So if I put it back to where I actually entered the position, it looks quite good, right? But if we step down to the 15-minute time frame, following that fundamental bias, coming into London session as well, price action started to step its way down. We had this consolidation part, rally to the upside, break of structure. That to me was enough confirmation to be able to catch that retracement sell. And obviously there's risks involved when you're taking these sort of setups in these huge bullish ranges like this. But obviously market equilibrium exists and there has to be a retracement at some point. Doesn't mean there has to be a retracement right now. Price action could have retraced to here and kept going higher, and it could have from here as well. There's no rules around that, but eventually it would have to come down and fill these imbalances. But anyway, 15-minute was bearish, break of structure to the downside. The 5-minute time frame, starting to look at this a little bit nicer here. Obviously price action is stepping our way down within that 15-minute range. There's a few different recovery zones in this area, but price action started to consolidate here. And I had this 2-minute recovery zone marked out here, and it was so close to filling it. And just because price action hasn't quite filled a recovery zone doesn't mean I won't take it, because there's no rules on price fully filling a recovery zone either, or fully filling an imbalance. Sometimes price comes up quite close to filling an imbalance and doesn't quite fill it, right? So it really just depends on price action, and I trade what I see. So price came up quite close to this recovery zone. I was monitoring price action. If I step my way down onto the 1-minute time frame now, we can see we had this consolidation, price moved up, created another high, broke structure to the downside, hasn't quite broken this low, but I was expecting for price to pretty much just plummet after it broke structure here, because volume was quite low in this period as well. But we failed to break this high here, and as well on the 5-minute time frame, this beautiful bearish high test candle formed, rejecting this area. That was enough confirmation for me, so I entered my position there. Stop loss up here, VWAP. It was also consolidating right on VWAP. So look, it was an absolutely awesome position. Price came outside the second standard deviation, broke underneath the VWAP, VWAP, sorry, came up to VWAP, 5-minute bearish high test, and that was my entry. So if we see how price action played out after that, came so close to my take profit. And the reason why I had my take profit set here was there's not really anything major to target besides lower time frame market structure, but there's really nothing there. But if you mark out from this range, from the top to the bottom, 50% is around this area. So I wanted to target that, and obviously you can see price action filled that quite nicely. So I wanted to target that 50% level, but as you can see, price action came up, wicked me out. I actually placed my stop loss to roughly here. I lost like 0.2%, so it was absolutely nothing. It was good risk management as well. But yeah, it was just unfortunate position, really. There's nothing too much you can do about it. I didn't enter any more positions after that. I could have re-entered, didn't want to. Cop the loss, move on to the next opportunity, because as you're scalping, there's going to be opportunities almost every single day. And it's better to be patient and take the right setups than a bunch of trades on average setups. But the Euro USD trade was very similar. Ended up being a lot cleaner. So similar setup on GBPUSD, but except price action sort of created this head and shoulders, came down, retraced to this recovery zone, very close to filling it again, then broke structure, absolutely beautiful. If we go to the 5-minute time frame now, filled this 5-minute recovery zone, which is in line with VWAP as well, which is awesome. My student that I was on the call with was almost going to place his short position on this bearish candle, because actually on the 2-minute, I think it was a high test, but no, it wasn't. Price action was actually looking really good around that level. I just told him to wait for price action to give him one more confirmation. And it was essentially this break of structure to the downside here on the 5-minute time frame, also on the 2-minute. Should have used replay. It looks absolutely awesome. So that was a really nice confirmation to be able to continue lower. And if we look at the 15-minute candle as well, there was a 15-minute candle close as a massive bearish high test candle rejecting that area. So it was essentially like a perfect setup. And he targeted, I think, this low first, but he ended up getting in, I don't know, I'll put his results up on the screen now for you guys to see, because I'm not 100% sure. But it was a really, really good setup, and it had opportunity to target actually a lot further. If he was to target, I guess, the next recovery zone all the way down here, it'd be around 15 to 1. So it's absolutely insane opportunity there, following our fundamental analysis, which is really, really good for GBPUSD. Still played out at the end of the day. And as you can see, it's still following that analysis right now. But yeah, that was the trade. Obviously, unfortunately, it's a loss, but you can't win them all. And I want to be transparent with you guys and show you the trades that I've lost, the trades that I win, and potentially areas that I can improve on as well. So there's nothing really there that I would change. It's just an unfortunate setup at the end of the day. And the good thing is, even though I could have re-entered, I'm glad that I didn't, because there's really no point in spamming a bunch of positions and hoping for the best. I would much rather execute on really good setups, high probability trades, and I want a lot of confirmation on my side too. And price action here, as you can see, didn't really look very, very good as well. Price action rallied super high into this area, so I wasn't super confident in price action actually following that bearish momentum, but it did in the end. So that's all for today's video, guys. I hope you all enjoyed and learned something. If you have any video suggestions, put them in the comment section below. If you have any questions, put them in the comment section below. Hit that subscribe, hit that like button, turn on the bell notifications. Stay in tune for future videos. And also, I will be doing live trading sessions and pre-market analyses on this channel, so stay tuned for that. Let me know if you're interested as well, but I will see you on the next video. Thanks guys.